Gold's record-breaking rally, a sneak peek into Bitcoin's future? Gold has shattered all expectations, soaring to an unprecedented high of $4,370 per ounce, leaving many investors in awe. But here's where it gets intriguing: while gold has been on a relentless upward trajectory, Bitcoin seems to be lagging behind, stuck in a state of stagnation. This divergence has sparked a heated debate among market analysts and investors alike. The digital gold dilemma. For those who bought into the narrative of Bitcoin as digital gold, the current scenario is nothing short of disheartening. Gold's 60% surge this year, compared to Bitcoin's modest 15% gain, has raised questions about the cryptocurrency's ability to live up to its moniker. And this is the part most people miss: the timing and nature of institutional buying could be the key to unlocking Bitcoin's true potential. A tale of two assets. The story of gold's rise is not an overnight sensation. Central banks began aggressively purchasing gold in 2022, but it took 3 years for prices to gain momentum before exploding in 2025. Similarly, Bitcoin's institutional buying spree gained traction in 2024, with ETFs and corporations snapping up a significant portion of the available supply. This delayed explosion pattern suggests that Bitcoin might be on the cusp of its own gold moment. The $200,000 question. But how high can Bitcoin go? Opinions are divided. Some analysts, like Arthur Hayes and Standard Chartered, predict a staggering $200,000 price tag, while others, such as 10x Research, remain skeptical, arguing that even surpassing $140,000 by year-end is a coin toss. This controversy highlights the inherent uncertainty surrounding Bitcoin's future, making it a topic ripe for discussion. Central banks, the game changers. The role of central banks in driving gold's rally cannot be overstated. Since the U.S. seized Russia's treasury holdings in 2022, central bank purchases of gold have doubled, reaching approximately 1,000 metric tons annually. This institutional buying power has been a significant factor in gold's ascent. Bitcoin, on the other hand, is still awaiting its central bank moment, although ETFs and corporate treasuries have made substantial inroads. The price-sensitive investor effect. Interestingly, gold's price didn't skyrocket immediately, even with central banks' aggressive buying. Instead, it experienced a gradual climb, with price-sensitive investors selling into rising demand. This pattern is reminiscent of Bitcoin's current situation, where ETFs and corporations are buying, but price-sensitive holders are taking profits. As Matt Hogan, CIO at Bitwise, suggests, this seller exhaustion could be the catalyst for Bitcoin's explosive growth. A controversial take: is gold's rally a warning sign? Not everyone is convinced that gold's rally is a positive omen for Bitcoin. Mike McGlone, a senior commodity strategist, views gold's velocity as a cautionary tale, drawing parallels to the 1979 rally that preceded a period of aggressive rate hikes. This counterpoint raises a thought-provoking question: is gold's outperformance a sign of underlying economic instability, and what does this mean for Bitcoin's future? Final thoughts: will Bitcoin have its gold 2025 moment? As the debate rages on, one thing is clear: the relationship between gold and Bitcoin is complex and multifaceted. While gold's rally may provide a roadmap for Bitcoin's potential, the cryptocurrency's unique dynamics and institutional adoption timeline must be considered. So, what do you think? Will Bitcoin eventually surpass gold, or is it destined to remain in the precious metal's shadow? The comments section is open for your thoughts and opinions, and we encourage you to join the discussion.